Hello everyone, how's it going? In this video, we will talk about MULLEN, trading under the ticker symbol MULN. MULLEN has been a very interesting company to trade recently, with high volatilities and also many projects that may fuel future speculations. At the same time, it's a company that the market tends to not trust too much with the capital, especially when it comes to long-term investment. So, in today's video, we will go through the latest fundamentals, the price actions, and my analysis, as well as recommendation to hopefully see what is the best course of action to carry out regarding MULLEN. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description, as every help is greatly appreciated. During Monday's trading session, the stock price of MULLEN unfortunately continued to tank, which is mostly in line with shareholders and the market's expectations. The market has little to no interest at the moment in catching a falling knife, and to this extent it is quite easy to understand the motivation of existing shareholders dumping their positions, fulfilling therefore a self-fulfilling prophecy. MULLEN fell by almost 11% during Monday's session. And to be honest, this is something that we really have to watch very carefully before making any move into the stock. Now, on a longer time frame consideration, the price is still making new historical lows one day after the other, and given that the stock has only recently gone through a round of reverse stock split, I'm pretty sure that they cannot keep going on like this. And with the lack of any sort of encouraging signs from MULLEN itself, it has lost more than 90% of its value in the market since 2023. This is mainly because the company gives people a sentiment, or rather an illusion, I want to say, that it's going strong. But in reality, I think it's mostly just running out of cash, running out of time, and running out of goodwill of being delisted. I personally don't believe that the market is ready to see MULLEN as part of any sort of serious position taking just yet, and its future on the Nasdaq remains very uncertain, and this is going to impact its capacity to raise capital. And speaking of which, we already start to have doubts about its going concern assumption. In other words, can MULLEN continue to stay in business? This already has been raised by the auditors. So, let's see. Maybe the future is going to be slightly brighter for MULLEN, or maybe not. But regardless, we definitely have to keep this in mind going further. Now, let's also take a look at the technicals of the stock. The trading volume of MULLEN has recently been around 70 million shares versus the average volume of 46 million shares. Over the previous 52-week period, the price fluctuated between 41 cents and $42.75. The volume of shares traded tells us how many shares are being bought and sold at any given time in the market and if there's enough liquidity to support such a trading strategy. If the float remains very thin, it's going to be very easy to influence the stock price, but low liquidity could also mean that the demand is limited. When we compare the current volume against the average volume, there might be a possibility for the trend reversal or breakthrough if the difference is very large. So for instance, if the stock were to break through, the current volume would be significantly higher than the average volume. Now, the market cap of MULLEN is currently around $74 million versus the enterprise value of barely below $50 million. So when we compare the current price to the historical price fluctuations, the stock is 4.1% higher than the 1-month low, 4.1% higher than the 3-month low, and 4% higher than the 52-week low. On the options market, which often gives us a hint about the market sentiment, the implied volatility is 271% versus the historical volatility of more than 100%. The put call volume is almost 45 to 49%, in favor of calls. In other words, there are slightly more people thinking that MULLEN is going to go higher amongst the people who really have bought, who committed capital into buying options contract. So, because many institutional investors hedge their long positions by buying put options, it's actually normal for many stocks to have a slightly higher put option volume than what they deserve. So, despite all this, it's in favor of the calls. This means that many people think that at some point it's going to bounce back just because the stock has to remain above $1, because they think that MULLEN is going to wiggle around and pull through the storm, just like they have managed to do so until now. And the most recent volume of options traded has been 45 contracts a day versus the average volume of 33. The open interest is above 1 million contracts. Regarding the shareholder structure, MULLEN has above 100% institutional shareholder. This is likely due to short selling in the outstanding shares, the biggest shareholders including Vanguard, BlackRock, and iShares. Now, usually it is the best to see some institutional interest and also participation when holding a stock long term. This is, of course, if your plan is to hold it, and like hold and forget, because it offers a layer of stability and legitimacy for the long term. It means that the market is confident that it's going to deliver value in the long term, which is an important factor to consider for the investors. I personally consider the minimum threshold to be around 25 to 30% of institutional ownership, although there might be many exceptions to the rule, as there will always be great companies mostly owned by retail traders as well. The current short interest is around 17% of the total float, which is not that significant for a stock that is, as whose future is like as dire as MULLEN. And 57% of these are dealt in the dark pools. Now, usually if the short interest is above 15%, I'm going to say that this may suggest structural institutional positions taken. There would be potentials for short squeeze. But in this case, I would say that there are also like fundamental reasons or just logical reasons why people want to short MULLEN. It's because they may have an existing exposure in the stock and they want to protect themselves against those risks. That's like a very easy example. The other ones, well, it's just because this company hasn't really produced anything. They are known for a lack of transparency. They're known to be, how can I put this, problematic in terms of their like investors' behaviors or owners' behaviors, how they were exposed by different parties, including the good old Hindenburg research. So those kinds of news certainly don't help MULLEN. With that being said, irrational movements with penny stocks, and in this case, like volatile meme penny stocks, are always possible. It's difficult to pinpoint when they're going to happen, but it's always possible. So we really have to keep in mind that MULLEN is mostly a short-term trading position. It's not a long-term investment opportunity. MULLEN is a publicly traded company operating in the EV sector, and it is listed on the Nasdaq Stock Exchange. The company designs, manufactures, and sells a range of electric vehicles, including car, buses, and trucks. One of the key factors setting MULLEN apart from the EV sector is the focus on developing long-range electric vehicles. M115 is a long-range electric truck that the company is trying to develop and eventually to manufacture. It has a significantly longer range than most other vehicles currently on the market, making it an attraction option for people who would like to invest eventually in this massive potential success. Another thing is that they are investing in developing heavy-duty electric vehicles, such as buses and trucks, designed to handle heavy loads and perform demanding work. This is a unique offering in the EV market, where most other companies are focused on developing cars and light-duty vehicles. In terms of financial performance, however, the company has been having a hard time generating income and consequently digging itself a large financial hole that they have to fill every time with further dilution. In terms of the long-term price action trends, despite the recent upward momentums such as IGO distributions, the company has been having a mostly bearish trend over the past 5 years, first trading between $5 to $10, peaking at $15, before finally falling back to below $1. What this suggests is that MULLEN has been hard hit by not only the market downfall, but also its own fundamental weaknesses. This assessment recently begun to change, but I would say that it hasn't reached a convincing turning point, and that to a point, it still explains why MULLEN is a stock I would recommend to trade instead of investing in. Regardless of the recent distribution contract or the short squeeze potentials, the short interest surrounding MULLEN remains real, and that the interest surrounding MULLEN, period, remains the expectation to scalp a quick gain. With that being said, I also want to add that things can always change within this sector. So if today I say that MULLEN shouldn't be a stock that you invest in, maybe 6 months from now things could be different. The online communities have been initially skeptical towards MULLEN. Nowadays, it's mostly something that follows the trend. So for example, if things are looking good, they will find the positive aspects of MULLEN and to say that, you know what, this is why it's been going well. Or if things are plummeting, they're going to say, well, you know what, like such and such reason is the reason why they're doing poorly. And you will also have a small group of fans who will always find reasons for optimism, regardless of how desperate sometimes the situation may be. As far as their online footprint is concerned overall, the biggest factor to consider is whether the price action gives people enough motivation to have a position in MULLEN. The other factors have sometimes served as a pretext to buy its shares, but more often than not, the price action has already sent that price signal to the market to react positively. On top of that, the macroeconomic trends affecting the sector have also been putting pressure on the stock price, including the increase of interest rates, the capital flight from growth stocks to other sectors, the conflicts around the world, the supply chain issues, and the expectation of a demand that will be softer than usual. And this is going to continue over the next couple of years due to a recession. Another factor to look at is how the flagship company in the sector, so in this case Tesla, has been doing. The EV sector being a relatively new industry, a lot of it is still in development, including the investor's mentality. People often determine whether they want to buy EV stocks based on how Tesla has been doing recently. The idea here is to profit from a sector-wide gravy train conducted by Tesla, pulling all the other ones behind it. We have seen on multiple occasions how the share price of a company like NIO, Lucid, XPeng, or MULLEN follows similar trends compared to Tesla. Of course, MULLEN doesn't always follow the trend, but it has played in its favor, but also the other way around. So we have to be mindful of those factors because they will definitely paint the picture of the surrounding environment in a specific direction. With that being said, let's also take a look at MULLEN's financials, which might give us some hints about the decisions that the company has to take in the upcoming periods. One thing to note about its financials, it's not generating income for the moment, but we know for a fact that they are currently distributing IGOs in Europe. So this will eventually change with the upcoming reports. The other issue is the cash reserve. So I personally believe that MULLEN is a company that has to rely on continued capital injection by selling its equity to continue its going concern. This is concerning to say the least, but in my opinion, this is going to continue for the foreseeable future. In other words, the retail interest has to be significantly larger than the dilution that will be announced in order for us to make money. So like I said before, the fundamentals don't necessarily help Mullen. They are currently a dead weight that will eventually push the price down. But if we rely on qualitative factors, things that are beyond the immediate reality, but if we project the company to a brighter future, then it's possible that a large number of people might pile in and buy the stock up. This is the kind of behavior we're expecting to see if we decide to invest or to trade Mullen. Because in terms of trading, Mullen actually has a very good shareholder structure. So they have a mostly retail shareholder base. And what this means is that they will be far more volatile than typical stocks. Of course, I know that BlackRock recently increased their holdings, but this is not doing it for me. That alone doesn't mean much, personally. So, the lack of significant institutional participation means that I personally don't want to put money in for the long term. The key behavioral difference between institutional and retail shareholders is their investment horizon. Institutional buyers tend to stay for longer term, with years or decades as the measurement, whereas people who are in as retail, they tend to get in and out very quickly. Sometimes after a few days or weeks, they might already be gone. So, the short squeeze seems to be the massive catalyst that we are dealing with at the moment, and this is something that can present excellent opportunities for us. So currently, there is a significant position, around 40 million shares, that are being shorted against Mullen. The majority of them are traded outside of public exchanges, so therefore by institutionals. The potential of the short squeeze in this case is significant. The short squeeze is a phenomenon that is observed when traders decide collectively to buy up the price of a stock, forcing those who are holding the shares to redeem them. The reason why they may have to do this is because they want to avoid further losses. So the redemption would act as a further wave of purchases, pushing the stock even higher. So it's important to note that regardless of how many stars are aligned on paper, the short squeeze itself may never happen, just because there are a number of factors outside of anyone's control that will determine if the short squeeze is something that will occur. I would recommend to commit between 0.5% and 1% of your portfolio eventually, certainly not now. It's better to wait and see what's going to happen and to, make your decision according to those future scenarios. In my opinion, Mullen definitely has to reach $1, hopefully by itself, for us to even consider putting money in. In the current scenario, I would say that Mullen may be having a delisting issue and also a, how can I put this, a solvency issue that's not really in the long-term horizon, but more in the medium-term horizon. So this is why we really have to be careful, and it's better to not overextend our commitment in Mullen. And even if you want to buy Mullen, you have to split the allocation in batches of 20% at a time over a period of 3 to 6 months so that you may purchase more in case it retraces further.